Good day everyone, in this video I'll just be showing you guys how to use trend lines to draw support and resistance, how to use psychological levels, and how to use a rectangle box to also draw zones for support and resistance. So I'll be using GBP USD for this analysis. If you want to add a symbol, just come to this trading view. You can just tap on the summation sign. Okay, so we are here. These are GBP USD. One thing you have to know, you see support and resistance and trend lines. Just come to your 4-hour time frame and draw it. So these are time frame. This is on 4-hour time frame. So if you want to choose any time frame, just tap on this place. Then you can choose any time frame of your 1 hour. It will appear. Then I'm using 4 hour because I want to draw a trend line now. So I'll just be tapping on this 4 hour. So mind you, like in an upward trend, the market will make a higher high and a higher low. In a downward trend, it will make a lower high and a lower low. So I'm not using a laptop, so I'll just be placing my screen on rotate. So this is it. Okay. So analyzing the chart now. Okay. So what can you see here? I'm seeing this is a higher high, this is a higher high, this is a higher high, and this is a lower high, and this is another lower high. Why? Because of the market is in a downward trend. So what will you be advised to do here? I advise that you just come to this place that is like a pencil. You tap on it. That should draw a trend line. You tap on. Can you see this trend line here? You just tap on it. Then you drag this your arc. If you are drawing arc, place it at the top at the candle's wick. You don't form trend line, so just place it and draw it. Draw it to connect all the lows at the wick. Okay. So there we have our trend line. Okay. Then now just put it on like 2 pixels to make like this thing to view very well. So I'm putting it on 2 pixels. Okay, can you see our trend line is now fat? Okay, let's go. So we are drawing the trend line. So now, like in this trend line stuff, what you have to do is wait for like a first touch, a second touch. The second touch might not touch it, but just wait for a first touch, a second touch, and the third touch. At the third touch, then you can then take the trade. So this is it here. The first touch, the second touch. Just wait for it at your. Just go to your 15 minutes time frame. Let's go to a 15-minute time frame. We are just backtesting with this trend line stuff. Let me go to 15 minutes time frame because it's 15 minutes time frame that is best for taking trades. Only use 4-hour time frame, 1 hour time frame, and 15 minutes time frame. No need to confuse yourself about all this stuff because time frames are very confusing. So this is it. So these are 15 minutes time frame. So these are trend line. This stuff. Okay. See, phone can be so annoying. So these are our first touch. I hope you guys can see it. Make this stuff large. So okay, to feed data. Okay. Okay, so I hope you guys can see our first touch. Oh my god. Okay, this is our first touch here. Look at the first touch. The first touch. Then let's go to the second touch. Okay, this one touched. Yes, the second touch here. So in this second touch, you can just go there and place a trade. This thing. So look at the second touch. If you want, you can come to the second touch and place a trade. This place, these are second touch. Hope you guys can see it here. You can go there and place a trade, or you can wait for the third touch. This is the third touch, but I always advise, please always wait for the third touch and a candlestick confirmation. So let's dive into candlestick now to do this stuff now. To do this stuff, we have to go to candlestick. Let me show you guys an example of candlestick that can help you trade these things. So let me put the screen normal. So let's look at the candlestick very well and the candlestick pattern. So let me go to my Chrome. Okay, let's look for candlesticks. There's candlesticks. Okay, load Chrome. So downloads. I've downloaded them already. So let's just look at the candlesticks. Other this video will take a lot of space, but you have to create time for yourself. So look at the candlesticks. So can you see this a morning star pattern? A morning star pattern at the key level. Can you hear it? A morning star pattern at the key level. It signifies what? A bearish movement. That's like a reversal to become a downward trend, like a reversal to sell. That's the signal to sell. An evening star candlestick pattern. Look at it here. You can screenshot this thing. Another one. This is a morning star pattern, but is with an abandoned baby. Mostly you don't see this stuff in the chart. These are abandoned babies. And look at this one. These are also a bullish movement. If you see it at a key level, don't worry, we are just coming to there. Mind you, it won't look like this in the chart. It won't look like this. Look at another one. This is another doji. All these candles that are like plus are just dojis. They're just doji, which signifies a reversal. It's a reversal candlestick, a doji. This plus, it will just be like some of them will be long. Okay, this one, this harami stuff, I don't even take it in my charts. It's just the look at another evening star. You see another one. This is a doji. This short red candle at the top is a doji. And look at this one, an inverted hammer. You can also call this, it's either you call it an inverted hammer or a pin bar. And this a bearish movement. This is bearish. Mind you, bearish means that it will go down. Bearish, bullish means it will go up. Then buy means it will go up. Sell means it will go down. So this another what is the name? Hammer. You can call it a hammer, or you can call it a pin bar. And also mind you, like this hammer, it doesn't matter the color of the candle. It doesn't matter. It is only in this thing. What is the name? It's only in bullish engulfing and bearish engulfing that it matters. But you see, in doji, you see this doji candlestick. It's not a must that it will be green. It can be red and we still make an upward move. It is not a must. Even this pin bar or the hammer, anyone that you can call it. This one, this hammer inverted, it is upside down, so it is a bearish movement. It is upside down, it is a bearish movement. This one, it is upwards, so it means that it is a bullish movement. It is a bullish movement if you see it at your key levels. So look at another one. This is a big red candle. Look at another morning star candlestick pattern. So look at a bullish engulfing candle. If you see a candle like this at your key level, just take the trade at your 15 minutes time frame at the key level. The key level is the part that it touched that trend line, the part that it just touched. If you see this candle, just wait for a candlestick pattern there. So look at another one. This one is the evening star with this doji. This is a doji. So look at the doji. I hope you guys. Doji, the board is very small with a long wick. with a long equal wick most of the time. Just long equal wick most of the time. Look at another one. You see this green candle? This green candle, it is a bearish movement. This green candle, you see, this can be a hammer, this can be a pin bar. So this is a pin bar, or you can call it an inverted hammer. If you see it on your chart, just know that the price will go down at your key level. At your key level, I repeat, at your key level. Look at another one here. So you guys, you can just screenshot it. I'll send the video to the group. So let's go back to our chart. Let's go back to our trading view. There's our trading view. So trading view. Okay. Let's apply these candles that we just saw now. Let's just apply it now. Our trading view load now. I'm taking most of my time. Just apply it. See, trading. If you know what you are doing, you can change like a lot of stuff. You can change so many things in your life. You see, with just trading, just analyzing, just come down, sit down, create time for yourself, then analyze charts. So I just want to address this trend line. So let me just move to 1 hour, time frame. So just place our phone on, what's the name again? We just rotate our screen, then we shrink our charts. This stuff, I don't know how we remove this. Am I a citizen of England that they will be showing me this stuff? So look at it here. Look at the first touch, second touch, third touch. That third touch, just wait for all this touch. So wait for it. So let's make our chart large. Make sure you draw this trend line by the weeks, only the weeks. Just come to your 4 hour. I think this stuff is having problem. Okay, so look at it. That first touch, we have to connect all these things to weeks. So look at the second touch, even though I didn't reach like that. So this is still a second touch. I look at the third touch. If you took this trade, you could have taken it down. Taking it down to here, like that's a good profit. Or you can just use the second touch. But why I prefer the third touch is because of it makes your trade like, it makes it like high probabilities. Because some people now, they just take this one as a second touch. They will then take the trade. So most of people that fear in the market, they will fear that this might cause a breakout. But it is in a downward trend though. They will just be afraid. It will come up. They will just go and close the trade without even having the profit. In this type of stuff, if you are fearing, like, that's why I say don't use 5 minutes time frame, just use 15 minutes time frame. If you are fearing and like trading, if you take a trade and you are scared, just this is what you do. Zoom out to your higher time frame, zoom out to the 4 hour, or zoom out to the 1 hour. So in this place, if I'm to take a trade here, I can see a bearish engulfing candle here. Can you guys see it? That pattern, a bearish engulfing candle. This red candle engulfed this green candle. So upon here, you can take your entry. Upon here, upon this place, you can take your entry. This place, you can take your entry. So yeah. And let me pull out something and pull out some stuff like that. Okay, you see, like, I'll be needing a psychological level here. You see, that those things matters a lot to like know where to take profit. Your psychological level, draw it at your 4 hours time frame. It's better there. Draw it at your 4 hours time frame. So this is it. I hope you guys can see it. Like, look at it here. Some people call this strategy trend line bounce. First bounce, you can still consider this as a second bounce. You can still consider this as a second bounce. You can still consider this as a third bounce. or like you wait for this place to make your trade in high win rates. Like if you want to flip, you can wait for this third significant one. We saw that it touched very well. You can wait for this third one and then flip it small and target to this low, maybe this low, somewhere like this. Or maybe if you target to this place, like somewhere like this will be okay. But don't be too greedy. If it's like where you expect to take profit, just take it there. So that's it. So another one, we'll be drawing the trend line that we'll be drawing. Draw a trend line, like first one high and another second one low. Let me show you guys that to determine a trend line breakout. So this trend line, I know that it will still break out. It's not it will still break out. So the next one, make sure you shrink your chart too. Shrink it very well, because you are not using a laptop. Shrink it very well. We are not using a laptop. So you come to this pencil again. These are trend line. You tap on it. Okay. Remember 4 hours time frame for drawing trend line. So we draw this one below at the low of the week. Just make it to be significant, or don't draw something like cockroach in the chart. So this it. Okay, make sure it like has like maybe this address is like just touch like 1, 2, 3. Like make sure like this, we are just using it for support and resistance now. I hope you guys understand. We are using it for support and resistance now. So these are support and resistance. So we wait for like support and resistance. What I normally wait for is for like second touch. First touch, dropped to this area and bounced it up. Second touch, you see our second touch, dropped and bounced to this area. So upon this area, you might just take a short a short long or buy. But you see, buying in a downward trend is very wrong. Always wait for a selling opportunity. You see this one, first sell, you just wait for it to bounce again and come up and bounce up to this trend line again. This is our second trend line. Then you can now look to take profit at this next key level. So these are key level now. Look at the first key level. Look at the first key level. Look at the second key level, upon which we take the trade. We are just using trend line as support and resistance now. So what are we seeing here? Which candlestick pattern is here? Which candlestick pattern? As you can see, it is very clear that this is a morning star candlestick pattern. Look at this doji. This doji here. Then this doji was above this doji. Then with a red candle, this red candle here, that's a sign of a morning star candlestick pattern. So if we use this 4-hour time frame as our trading time frame, you see we will not be able to catch a lot in the market. So it's better to just come down to the 15 minutes time frame. You go down to the 15 minutes time frame. Normally I use 1 hour time frame for Fibonacci retracement. So I'll go down to 15 minutes time frame. I'll still be making a video about Fibonacci retracement. So we just shrink our chart again. We find like where is that touch again? Okay, we said second touch. You can still consider this. So this one we can still, this a touch, this one touched. So this is our second touch, I think so. This is our second touch. Our first touch is down there, it's dropped and it went up, it touched again, expecting it to come down and bounce there again. It bounced there. Let's see the candlestick pattern that is there. Okay, you just moved it. Okay. Oh God. Where's that stuff again? Okay, look at it here. Okay. So as you can see here, what do we have here? just making a lot of noise here. Okay, but this is a long wick. There's something like that's our pin bar or inverted hammer. Look at it here. Look at our inverted hammer. I hope you guys can see this candle with this long leg, with this long head, long wick. This is our inverted hammer. I hope you guys can see it. So we can take a trade here, expecting it to touch this place, this zone. And please don't fear in the market. If the market is going on, just wait. Just wait for stop loss before take profit. Because say sure like person go blow account. Me, I don't blow self. But I'm no longer in that those people of blowing account because I learned my lesson. I went down to market structure. Imagine how this trend line. This is the third hit. Maybe you could have taken profits here. You could have taken your profit like around here. There's a psychological level here. You could have taken. Don't worry, I'll show you a psychological level. So this is it. So look our third bounce opportunity to like take another trade. So I told you guys that sometimes in the chart, those candlestick patterns, you won't like recognize them because of how they appear. Just take a look at this one. This one is just like I can call this a pin bar. Or you can call it a doji candlestick. This is a doji candlestick. This one, or you can call it a pin bar with long wick rejection. Just take this thing. Long wick, first long wick, second long wick, third long wick. Long wicks rejection. So you should have known, like normally, if it's like me now, I saw the first week rejection, second week rejection, third week rejection. I'm taking this trade. I'm writing it down. First week, and that's another one. First week rejection, second week rejection. What do we see here? This is like, I can call this pattern like I think Morningstar candlestick pattern that formed there. So look at it, like trend line bounce. This is your key level. This place. That's what I normally mean by key level. Wait for those candlestick patterns in your key level. So we can take a trade here and write it down. So let's make these things much easier by using a psychological level. So I normally recommend that you draw your psychological level at your 4-hour time frame. So you come down to 4-hour time frame. This is the 4-hour time frame. Come down there. Okay. Since my chart is what is the color of this my chart? Right, no need to complicate things with color. So my psychological level, I will be drawing one here. So this is a psychological level. Can you see how all these lines that are somehow invisible? Just use the lines to draw your psychological level at the 4-hour time frame only. They have like main psychological level and sub-psychological. Just use 4-hour time frame from drawing your main psychological level. So I'll come there. I will tap on the pencil again. Okay. Then I'll go up. Then this is a horizontal line. We use the horizontal line for drawing it. So you tap on the horizontal line. And this is our first psychological level. So let me take. Can you see it? I think it's 12500. We come here and place at 12500. Just place the line there. So as you can see, it is in 1.25005. I want it to be at 12500. So what do? We double tap. Okay. Then what do? We double tap here. 1, 2. So this is it. They have the style. If you want to change the color, they have the text, then the coordinates. You come there. So what we want is 1.2500. So you understand. So 1.2500. Can you see it? Yes, it's okay. Okay. So it's there. It's now at our 1.2500. Then come here again. we want to draw another one out. What is the next level? I think it's given like 1,000 gap, 1.0100 gap. So you come there and draw another one. You can do this in any chart, But me, I don't trade stocks, so you can come here and drop another one. So this one should be 1.2600, I think so. So we'll be drawing another one at 1.2600. These are psychological level. Psychological level is just like, let me say you went to the market to buy like say things don't hard now. You come go market up now na 300. So the woman come, the person where they sell up, but the person that sells up like tells you like the up is 250. You come like, where will your mind go next for like pricing? You say no, I'm taking like, if you're not giving it to me 200, I'm going. So the woman may say, okay, come back, come and take it 200. Then imagine, then she will not give it to you 200. Imagine if you now say, okay, no, I'm not taking it for that 250. I'll take it at 240. The person will not even agree yourself. The person will not even agree. So you have to place this psychological level with sense. So 2,500. Another one should be at 2,600. You double tap it again. 1, 2. Okay. You say 2,600. Remember. Tap on it. Coordinates. Remember. If you don't understand it, you can still rewatch it. You can still rewatch it 1,000 times. Just download the video. 00. Okay. 1,600. Okay. Okay. Okay, that one is okay. So how many pixels is this one carrying? I'm just checking the pixel. Okay, so how many is this one? This one seems darker. What am I making? What seems darker? Okay, let's place another one. Another one will be where? Answer. Type in the chat box. Another one you should know, it is 1.2700. Come to our pencil. Then we are using horizontal line. Tap on the horizontal line. Then move it and drop it at where? Drop it like an airplane. And drop it at, so if we are dropping a missile, drop it at 1.2700. Don't mind my this thing, because it's, say mathematics, we know they call them 1.2700. Now 1.2700 is for you guys to understand. So we double tap on it again. 1, 2. This stuff. See, I'm not even using this thing, a premium in this trading view. We want it to show at this psychological level, so we double tap on the psychological level, just that normal stuff, but the thing was misbehaving. So we clear it. 1.2700. 000. Okay. So we then have our psychological level. So let this stuff not fool your chart, and this psychological level can also serve as support and resistance. So let's come and drop out 1.2800. I will be dropping there with a horizontal line. We are 1.2, 1.2, it's 1.2800. So drop it there. Remove this your stuff, tap on it, and it goes away. Then make sure it has 1.2800. So that's it. So these are psychological levels. So to combine it with this trading now, this, so these are second touch. If you might like to trade with second touch, so these are second touch. Okay, then these are second touch. We would like it to come down to this next psychological level. What do we do? So you enter the trade with a this thing let me go to 1 hour time frame to make this thing, because 15 minutes we just make the chat like much rowdy or noisy. So you come to this 1 hour time frame to place your buying positions. So look at it here. So what do we then have here? So how come that all this thing? Okay, delete one point. It's just a mistake that I made. 700. Sorry. 700. Okay, cleared out. Okay. So you guys can see clearly what I just said before. Like this one, it's even clear. So like there's something like they call confirmations before you take a trade. Like in this trend line stuff, if you want to take a trade, this another confirmation. You wait it to touch like your psychological level. Like this thing is touching your psychological level. And what did it give you at your psychological level? It gave you what? It gave you a bearish engulfing candlestick pattern. Look at this green candle. You wait for a bearish engulfing. So it gives you a bearish engulfing. So you don't even need this stuff again. This trend line for you to come and touch this trend line. As far as it is near, look at how near it is. You can take it there. So you can consider this as a second touch and this as a third touch. So we come there, we pull out our short positions. So these are short position. Where is it? So this is our short position. So these are short position. Our short position. This thing will determine where you enter the trade, where you placed your stop loss, where you will be taking your profit to. Just tap on the short position. Tap on it. Okay. So let me take we waited for this bearish engulfing candlestick pattern to form. After the forming of this bearish engulfing candlestick pattern, here, then we will then say, let us enter this next candlestick pattern that will be forming. After the forming, so maybe we say, let us enter this next one. We entered there. So we entered there. We placed a trade there. So what do we do now? So in this type of there's what we call a hesitation point in trading. So what is if they ask you what is the next hesitation point, the price showed something like it tapped to that zone and left, or it tapped to that zone, it shows something like in that zone, like it gave respect to that zone. So which is the next hesitation point? Look at this place. These are hesitation points. You see this place? These are hesitation points. This place, this point. Look at first hesitation point. Look at another one. This price hesitated here. It hesitated here. So where's our hesitation point? It should be above our psychological level. So look at our psychological level. I hope you guys are seeing it. This psychological level is powerful. So we come here to make our stop loss not to be too long, and we want to have a higher risk to reward ratio. We then place this place. We just drag this place that is like where's the name again? That is somehow like box. Just tap on it, move it. I hope you guys are seeing how I'm moving it. You just move it to like somehow above the trend line. Okay, like at that psychological level. Are you seeing it? So that's it. Just place it there, so that before price will just give the market a breathing space. Because of I'm not seeing this thing as well. I have to give the market a breathing space. Oh, let me delete it and add another one. I've just deleted our trend line. Just delete it. Okay, let me draw a trend line again. You see, I'm just seeing it on phone so that you guys can see it. But boys need laptops these days, so that when you be doing your chart analysis, you know, like maybe before you wait for this stuff, you just miss your entry. So let's draw a trend line again. Make sure like you are seeing everything well. That's why I advise most of the people to use, what is the name again, to use like light mode, not dark mode. Dark mode can confuse you. Dark mode, can you see in the dark and you're using dark mode? Dark mode can be very confusing. Especially this trend, I have to be careful in drawing it so that you won't miss your price. You need to be careful. Those are the weeks. Okay, it's okay like that. So done with the trend line. So just come. We are talking about our entry on 4 hour. So just come to on 1 hour. We just come to our 1 hour. So as I said before, like I said that you saw this. This trend line is supposed to match like everywhere. So it was touching here. I don't know. I also make it to be like significant at the week. So maybe this one is not even among. I just want to place this thing well on my 4 hour time frame. I can't even see the chart well. Okay, it's aligned. First touch, and that was our second touch, and this is our third touch, like we said before. So don't even mind this price movement. Just place it at all the previous stops. And mind you, sir, the candle stick weak, not the body. So we come to our 1 hour time frame. We are talking about our entry with the psychological level. So we saw this one. This is a clear, like this one. I can take it like maybe like it touched with. It is even in our psychological level, and it went up to this zone. Price went up to and it came down, and it came up again to touch this our trend line. The thing couldn't, and it came up again and touched it here. So we could enter here or here. No, let me just put it here. Right, enter this touch. Wait for it to touch your trend line. So I'll place my selling position. That's our selling position now. I don't want this video to be too long before people will sleep in this video. So like we place it here. Maybe we waited for this pin bar. Watch this. This is a pure pin bar or inverted hammer. This is your inverted hammer, but it is in a green color. This one here. This one here. This is your inverted hammer, but it is in a, just watching that white stuff that is just like a ball. Watch this white stuff that is just like a ball. Be watching it anywhere that I'm placing it, just because not the blue one. So what are you seeing here, guys? This is a pin bar. This is a bluish engulfing candle. So we could have taken entry here, or we could have, to minimize much risk, we could have taken it here. After the pin bar, we take it at this place. So remember to remove this your stuff. We remove it. So what do? We place our stop loss above the psychological level, giving the market a very good hesitation, because market can fuck someone up and leave. So we want to place it at this place. I hope you guys are seeing it. Just at the top, but it should be somewhere above the trend line, somewhere here. Giving the market like a good hesitation point. Okay, that's good. Then where do we ride it to? Okay, we could have said let us ride it downwards. But I said, because I know that some people won't still have patience, to the next psychological level. So I just placed this video today, being I think 24th June. So you could watch this trade, whether it will still take profit. So we remove it. Then you see how many risk to reward ratio? 4:8. Like that's a big risk to reward ratio. So if you are losing, you just lose small and target like times 4. you target times 4 of your losses. If you are just losing, let me say you are losing like 5, let me not put too much money in it, because some of us, like very young boys, it's very hard for us to get money. Let me target like we are losing $1 in this trade now. Then if we are using like let me take 1x leverage. If you are using 1x leverage or 10x leverage, let me take, you'll be losing, if you are losing, or let me just put it like 20x. If you are losing $1 here, then that means if you lose if you are losing $1 in this trade, you're just losing $1 to make what, $5. Then imagine if you use like 30x leverage. But what I advise is 20x leverage or 10. Then if your strategy is not working well for you, if it's not working well, change them. Just change. Like, use one strategy like for like 21 days. If you master it very well, then go ahead and flip. Just go ahead and flip. Like, make sure you use like 20x leverage to like master your trading strategy. Only 20x leverage, only 20. So this trade is a short, so it will definitely come down and touch this psychological level before thinking about maybe breaking out, or it might even break out here, because market can move in its direction and wound you. So look at an early entry. So we just took this trade here. So let's go to our next stuff. Let's go to our next stuff. So what were we talking about? We're talking about like we add like support and resistance zones. We add like the zones. Okay, let me go to the 4-hour time frame. Like support like it's just like you are standing on the floor. You know that let me take it like the law of gravity, maybe how people put it, science students. Anything that goes up must come down. If price goes up, it must definitely come back, and that coming back is what we call the pullback. Like in like price action, if you're changing price, you must definitely encounter a pullback. It's either the pullback will be higher or the pullback will be smaller. So mind you that you must encounter a pullback. So everything that goes up must come down. So that's why you need to have patience. So that's where we will not take it at support and resistance zone. So what is resistance zone? Resistance zone is a zone that is found. Make sure that you are writing this down. Resistance zone is a zone that is found above the price. What did I say? Resistance zone is the zone that is found above the price. So clearly now, and mind you, a resistance zone must touch multiple times. A resistance zone must touch how many times? Multiple times. One, it can touch like 2 times. The minimum is like 2 times. 2 times, then you know that it is a valid resistance zone. So let's draw a resistance zone here. Then what do? We just come here. We look for a rectangle. Look at our rectangle here. We tap on our rectangle. Okay, where is it? Okay, look at our rectangle. So looking at this chart, you should know that here, in this place, price resisted here and went down. It touched here and went down. Even here also, but this place is the valid place. Even it came at our psychological level self. Look at our psychological level now. It came there again, came there. So we can take this as 1, and we can take this as 2. Can take this as 2. So if we are drawing it like this, this place was a, let me just go to the 4-hour. No need to confuse things here. Let me go to our 4-hour and draw it, because this stuff can be somehow confusing. So remember, we are drawing it with a rectangle. So wow, 4 hours is a great time frame. So Let me just show you guys simple stuff. So what can you see? Price touched here and went up. Price touched again here and went up. Price touched again here and also went up. Price touched again and went up before coming down, and price came and broke the zone. There's something that we call breakout of support and resistance. Breakout and retest of support and resistance. Don't worry, we'll just cover it up here. So imagine how many breakouts. 1, 2, just two. That resistance zone is correct. Just 1, 2. It is correct. So let's pull out our triangle, our rectangle, I mean to say. Please guys, join my group. If I might be sending this video, I will be sending it to my to my Telegram channel and to my YouTube, so that guys can learn, people can learn. So this is our first touch of this place. Just touch our psychological level, touch our psychological level the next time, and touch our psychological level the third time. So at this third one, we could have expected to ride it up to the next psychological level. Look at psychological level. So you just call it a zone. That's why I'm marking it up with a rectangle. So you just come there, you tap it, tap that place, and then use this line to draw the rectangle very well. Okay, you can draw it like let it match the psychological level. It will just match with the psychological level and just stay in the middle of the psychological level. So there we have it. They just match. So this thing is taking a lot of time. So let it just match. We are using a mobile phone. So that's it. So jeez, what is wrong with this stuff? A rectangle again. Just draw it. Pull it up there. Just draw it. Let me draw it from here. Please make sure you watch this video till the end. No need of skipping things. If you skip things, you're skipping the strategy you are using. Make sure you watch it to the end. I tap on the screen to remove it, then tap here. Final. So what can we see here? What can you see here? So this is a valid support zone. These are valid support zone. This is a support zone. 1, 2, third one we take the trade. 3. 1. Okay. This one can be 2. This one can be 3. 1, 2. Okay, we can count that one as 3, but the main thing is, please do not fear. Just don't fear. So what is your aim now? We are targeting to this place, to the next psychological level. Then what will you pull out? You pull out that your long, because you will be longing here. This is a support zone. It's upon a touch. Just add this to your rule. Upon a touch of a support zone, what are we expected to do? We are expected to buy. We are expected to predict that it will go up and touch what? Our psychological level. That's it. I'm using TradingView. For you guys that are using MetaTrader 5, better use TradingView for your analysis. I don't know why you guys even like that MetaTrader 5. It's just good for placing trades. So 1, 2, can consider this as 3. We can consider this, but this stuff will be a long trade though. It will just be a long trade. So at this touch, what do we see? We want to wait for like candlestick confirmation in our what? In our everywhere you go, you must make sure that you have to wait for a candlestick confirmation in your what? Your 1 hour or your 15 minutes time frame. So let us go to our 1 hour time frame to check for this trade. This third touch. So I'm going straight to the 1 hour time frame. So this is our 1 hour time frame. I'll be tapping on it. So what can we see there? Okay, I think these are first touch, these are second touch, um, and these are third touch. I think so. These are third touch. Okay, let's look at that third touch very well. But wait, let's just look at this chart well. Let's look at it well. Let's look at it. Check it well. Check it well. Check your chart well. Can you see? Actually, price touched here first, second, then third. So this should be our third one. So no need of confusing. To just watch it. This should be our third one. So what are we waiting for? What is our confirmation here? We are waiting for is either a full bullish engulfing candlestick pattern, or we are waiting for an evening star candlestick pattern or morning star. That stuff confused me. Just memorize the candlestick chart pattern so that whenever you see it in the charts, you know that it is it. No need of cramming them. No need of. You can even take out your trading journal and write down the candlestick patterns and your confluences. Like in a trade, make sure you have a minimum of 3 confluences. So if we want to take this trade, what is our confluence? Saying that this trade is in a support zone. It's in a support zone. First touch, it went up. Second touch, it went up and touched here. It touched there. So, and came down to this same zone and gave us let me see this candlestick pattern well, and give us what here? Oh my god, this is a bullish engulfing candlestick pattern. So we could have considered to enter here. We could have entered here. Someone could have entered here. You could have entered after this bullish engulfing candlestick. You could have entered there and targeted up to this high. Could have entered and targeted up to this high. But if you say these things, you might be afraid. This just little retracement, you might be afraid, but don't be afraid of them. Don't be afraid of them. If you touch, as far as it's not hitting your stop loss, look at our entry now. This candle, long week rejection. It rejected this zone to come up. Long week rejection, a bullish engulfing candlestick, and it gave us the bullish engulfing at a psychological level. So what confluences do we have now? It touched our support zone, gave us a bullish engulfing candle at our support and our psychological level, and it touched our psychological level and gave us a long week rejection to the upwards. So here we could have taken a trade now. For long. So where's our stuff? Where's our longing stuff? So this is our long position. Long position is for if you are buying. So you place it here. So mind you, I said we could have entered here at this place. No, don't fear. Could have entered here. Maybe we could have entered. Just take it. We could have entered just our psychological level. Place it there, and here it is. Long. We could have targeted up high. Up high. Up. Just on the psychological level. Okay, that place is good. Then we could have given our this thing a breathing space. So that breathing space matters. Could have given it this place is okay to take it. So this place is okay. We could have given small breathing space. Somewhere is okay. My god, I've shifted our entry. Okay, somewhere like here is okay. What's happening to this stuff? Okay. So that trade. So this is the trade. You see. Look at our stop loss here. Look at our stop loss. Look at our entry. Just that this stuff is just. But if you just want to place everything good, so I say we should have entered like here, like this second candle after the bullish. That's 1.27027. 1.27027. So we double tap on this our long position. Double tap 1.270. So our entry is 1.27. That's our entry price. Then tap on OK. So you can see we are not even losing much in this trade. We are just losing small. Just give the market a breathing space. That's here. So what is the risk to reward ratio? 3:7. That's a big risk to. That's a very nice risk to reward ratio. You see, if your risk to reward ratio is 1, I'm just laughing at that person. Just make your risk to reward ratio to be like more than 2. So you can see price came down. Just be mean in market. If you come out in market, like if you take a trade and you place your stop loss here, don't shift it if market come near there. Never you shift your stop loss. In trading, you don't think. You only wait for your take profit or your stop loss. If you know what you are doing, you don't think in trading. You only wait for your take profit or your stop loss, or where you want to take your profit. So you can see this thing came. Some beginners or some newbies could have exited at this point, or could have exited at this point if they're afraid, or some scalpers could have exited at this point. Yeah, this part I'm showing with my white stuff. So but us or you guys are waiting for like to this psychological level. That's your main aim, and it smashed it. You can see we entered here. This trade could be like a day, and this is for intraday traders. This trade could be like a day, and so we waited for this take profit. That zone, we took it and we ate the profit. So that's it. So for scalpers could have used the 15 minutes time frame. Scalpers could have targeted from here to here, and they should have gone out of the market and wait for another retracement here. Another retracement should have been here. Waited for it and taking profit at this next level. And mind you, if you are scalping, just look at the next high. Look at this high. Let me place this stuff. Look at this high. Could have taken profit at this high. So could have taken profit and left the market here. So another one could have waited for a retest. It could have taken profit at this point. Just that same point. No need to confuse things. At the last high, at the last significant high, that's here. That's it. So wait for this point. We could have waited for this point and taking profit there. For scalpers, just leaving the trade. Then let's use this stuff. Mind you, I don't trade GBP USD, but just watch how I am analyzing this stuff. I only trade PEP. That's why PEP is here. Now I will show you guys my analysis from PEP. So watch this. Let us now draw our what? Our almighty resistance zone. Yeah. Draw these things well. Don't draw it like a cockroach. All man a human being. Don't draw your own like cockroach. Make your chart so clear. Let's say get one thing where then they say. Okay. I don't need it. So you could have seen first touch, second touch, third touch, fourth touch, and it came down. So you could have waited for like third touch. So these are resistance, pure one. No need to complicate things. Just put it there. We are drawing a rectangle now. Just put it there. Tap on it. Then now slide it. Then when you slide it, take it up high. Just follow the movement of the resistance, all the zones. So we could have just drawn it. So that's it. Well done. Make we clap. Make we just make you just let's make it to like be like at our psychological level, like at the middle. Like let us make our middle line to be at the psychological. Yes. So it's okay. Tap. Okay. Then remove it by tapping on it again. Then just tap again to just